This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, May 27th, 2016. Euro dollar. So the pressure is now back on the downside in the euro following that latest breakdown below some key support at 112.17, and this could set the stage for a move down towards the 108.23 to 110 area in the days ahead. At this point, any rallies are classified as corrective, with rallies seen well capped ahead of 114. Ultimately, only back above 116.17, that 2016 high from several days back, would really compromise this newly adopted bearish outlook for the euro. Sterling dollar. So cable has seen a nice little rally in recent trade, but the important thing here is that the market has yet been unable to break back above that key resistance area at 147.70, just ahead of those January 2016 highs above 148. At this point, while the market holds below 147.70 on a close basis, there is risk for another topside failure and move lower back towards next key support at 143.33 further down. So right now, the key message with cable is if the market can break above 147.70, we could be seeing a major structural shift here in the formation of a base, but an inability to break above 147.70 would suggest that this more meaningful downtrend is still firmly intact. Dollar yen. So dollar yen continues to trade within a well-defined downtrend, and this latest correction at this point is still corrective, with the market looking for a lower top ahead of the next downside extension, potentially back towards and below those recent multi-month lows at 105.55. At this point, we need to see a break back above 111.89 to really compromise this bearish outlook. Euro Swiss. So Euro Swiss setbacks continue to be very well supported, and overall the market is quite constructive, with the market looking for higher lows ahead of the next upside extension beyond 1130 and towards that yearly and multi-month high at 112 further up. At this point, look for setbacks to be very well supported ahead of 109. Aussie dollar. So Aussie is showing signs of a bit of a correction or consolidation following this latest breakdown below the 200-day moving average. Overall, the pressure remains on the downside though, and rallies should be very well capped ahead of the next downside extension back towards potentially a retest of that 2016 base at 68.27. Dollar CAD. So dollar CAD has been showing signs of the formation of a major base over the past several days, and any setback should now be very well supported ahead of 27.72, that previous higher low, ahead of the next major upside extension beyond 31.89 and potentially towards the 135 area further up. At this point, only back below 127.72 would compromise that newly adopted constructive outlook for dollar CAD. Kiwi dollar. So Kiwi gains have been very well capped in recent trade, and the market has been slowly grinding lower with possibility for a drop down towards next key support at 65.46. At this point, a break below 65.46 would then expose a retest of the 2016 low at 63.47 further down. Any rally should therefore be well capped, and very well capped ahead of 69, with only a break back above that 2016 peak at 70.54 to compromise this bearish outlook. SPX 500. So the S&P 500 had been showing signs of the formation of a head and shoulders top on the daily chart after stalling out above 2100, but this latest breakup does suggest that we could be compromising that outlook if the market can continue higher. But overall, while the market holds below 2112, that recent 2016 high, the topish outlook is still favored, with the market potentially seen rolling back over. A critical support now comes in at 2021, and ultimately a breakback below that level will be required to strengthen the topish outlook and accelerate declines. If we do see a breakback above 2112, this will open the door for a retest of the record high in the 2130s from 2015. Gold. So gold has seen some sharp setbacks over the past couple of weeks, and the market is now looking to find some support into that ahead of that key previous resistance area, now turned support in the 1190 to 1200 area. If the market can be supported here, we could still see a higher low ahead of the next major upside extension back towards and eventually above the 1307 2015 peak. But again, the market will need to hold above that 1191 to 1200 area to confirm or to leave open the possibility for this constructive bias and fresh upside over the coming days, weeks, and potentially months.